When I see the word logistics, I always think of the UPS commercial singing about logistics. Well, we have a company coming out and it's called Link Logistics. So Francis, will Link be as successful as its predecessor and its big rival UPS?
Well, right. They do provide logistics. They provide logistics departments in-house for their customers and their customers' plants to try to save them money on moving the product around. It's coming at 19 times past earnings. Some of the big competitors that are higher, 29 times, something like that. But in a ranking of logistic companies in the U.S., they rank 38 out of 50. That's not very high, and that might translate into kind of a lower PE. And then the president is 38. His father is the slumlord billionaire in Detroit. So that's actually where the money came from. And on the IPO, from the proceeds, they're paying themselves. They own the parent company. About 30 million, and the rest is going to pay debt. So it's a way to get money back to the shareholders there. It's at a slight discount. I'm just not sure about that company.
All right, then we have New Source Energy. This is a natural gas company, and they are looking to raise about $100 million. Boy, it's a terrible time to be in nat gas. Nat gas is at an all-time low. But you could also argue that because nat gas is at an all-time low, maybe this is a good time to get into New Source Energy.
Yes, 90%. There's an exploration production company where 90% of their revenue comes from natural gas and natural gas liquids. So, but it's coming at 65 times the recent earnings, recent 12-month earnings. So I think there are other companies out there that have lower multiples and have greater reserves than this company.
All right, well, let's take a look at RibX Pharmaceuticals. It's an antibiotic company, and here's the thing. They're like many of these other biotech companies coming to the public market. They're looking to raise money for clinical trials, but they're kind of losing money at the beginning. So it's a real risk for investors to take a chance with these pharmaceutical companies.
Yes, last year they're losing money a little bit. They lost $40 million last year, which is a lot of money to lose. And I didn't see any big strategic partners, with them. There's a lot of competition. Some of their drug candidates are going to be competing with some companies becoming generic. So I think they're coming at something like 3.4 times tangible net worth, which is kind of in the category, but I would stay away from that one.
This market is
stock tickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to